Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. I joke about it all the time, but one of the questions I always get asked is, Shannon, am I going to go to jail? And I always ask, why would you go to jail? And they say, I don't know. And it's a real fear. It's a very real fear. Is screwing up on your taxes going to send you to prison? Probably not. Really, probably not. And I actually have an authority figure on this topic to talk about this today, to talk about what actually constitutes a tax crime. You know, is this something that you've been exposed to? What to do if you suspect someone is committing a tax crime that affects you, right? And some of the top ways that small business owners can actually get in trouble with the IRS so that you'll know either if you're at risk of any of these things or put things in perspective on the problems you think you have. So I'm really excited to welcome to the show Robert Nordlander. He is a speaker, podcast host, a CPA, and an Amazon bestselling author. He spent over 20 years as a special agent in the IRS Criminal Investigation Division, chasing tax evaders and money launderers around the globe. Currently, he is the principal member of Nordlander CPA PLLC, a boutique forensic accounting and tax resolution firm. As a special agent, he investigated tax and white collar crimes that were profiled in the New York Times, PBS, NBC, and various magazines. And as part of his duties, he taught continuing education to other federal employees, including representing the United States in training foreign law enforcement in forensic accounting and anti money laundering investigations. He's currently the host of the Fraud Fighter podcast, which is focused on forensic accounting and the anti fraud and anti money laundering industry, and also Criminal Tax Files, which is focused on criminal tax matters. He has a Bachelor of Science in Accounting, an MBA, and a CFE certification. He's got all the letters, guys. He's got the alphabet soup. He's got all of the letters. And he is a great expert to talk to. He is not your typical CPA. He is going to tell you some stories. He's going to go through some examples of tax crimes he's seen and ways that you can avoid getting in trouble yourself. So without further ado, let's hear from Robert. Hey, Robert, welcome to the show.
Thank you, Shannon. It's good having you.
Of course. And could you tell our audience a little bit about yourself?
I am a retired special agent with IRS Criminal Investigation. I chased tax evaders and money launderers around the world for approximately 20 years. And then after that, I started a CPA firm that focuses on forensic accounting and tax resolution, which means I follow the money for forensic accounting, where the money come from, where the money go to. And then with my expertise and experience with the IRS, I now help solve large tax problems for taxpayers.
I love it. And most people associate, accountants with a much more boring job, I would say, or just doing taxes, just doing your basic bookkeeping. How did you get into that realm of the CPA profession and kind of stay away from we'll call it the mundane preparation type work?
Well, I did do the mundane preparation work for a long, long, long time. I'd say 8 to 10 years.
Right.
When I was a teenager, I wanted to become a special agent with the FBI. That's what I really wanted to do. I watched all the TV shows, Cops, Chips, Miami. Miami Vice. I watched it. Right, I loved it. That's what I wanted to do. But I took accounting courses in college and got my accounting degree, thinking that I could become an FBI special agent. Well, at the time, I was just too young to do so. And so I was with a small accounting firm and I did the tax preparation and the compilations and reviews and all that great stuff that was going on. And once I did that, decided to teach for a couple of years. So I taught at a university level, accounting and taxes and that type of thing. And during that period of time, I saw that the IRS had an opening for special agent. It's a great marriage between my love for law enforcement and my accounting background. So I applied and got the job. And I applied for Secret Service, FBI, DEA, but the IRS is the one that picked me up first. And I thoroughly enjoyed it because it was a great marriage between doing the interviews and carrying a gun and the undercover operations, all that we call sexy stuff, right?
Yeah.
And then you had to do a spreadsheet, in your cubicle to follow the money to find, to prove the bad guy committed tax evasion or money laundering. So that's how it worked.
Yeah, and before we hit record, we were talking a little bit about like the terminology, right? So I didn't realize this, but special agent means criminal investigator as well. They're synonymous, right?
That's correct.
Okay. And, we were talking about like white collar investigations and people who consider themselves like in the bureau or in the agencies. I think there's a lot of confusion around like who does what, right? Like who's investigating white collar crimes.
Well, white collar is a very generic term. It just
Right.
means money, right? There's two
Hmm.
types of crimes out there: passion and greed. So when it comes to passion, hey, you slept with my spouse, I got mad at you, I saw you in the bed with her or him, and I pulled a gun and I shot you, right?
Mm,
That's a crime of passion, but it's not a crime of greed. Crime of greed is one drug dealer, knocking off of the other one because you're encroaching in his territory because he gets his money from this territory, right?
mm,
Tax evasion and money laundering is a crime of greed. So anything in the realm of crime of greed would be considered white, we would call white collar, right? Well,
right.
the IRS criminal investigations is the only agency that has sole authority in tax crimes. So if there is a tax crime to be investigated, it's only the IRS can do so. The FBI, Secret Service cannot. There are a lot of agencies that overlap. So wire fraud, mail fraud, embezzlement, bank fraud. A lot of these agencies can work the same types of crimes. So that's where you have to get together and figure out who's working what crime and that type of thing, right? You don't want to step on
Right.
each other's toes. So we have a federal prosecutor that will help us lead us down that road. He'll tell us who he wants working what. But if there's a tax crime nexus to this, it has to be IRS.
Okay. What constitutes a tax crime?
Well, there is an element. There's a couple of what they call statutes. Statutes are what the federal laws, and the federal laws are out there. And regarding tax crime, is people have heard the word tax evasion, and that's when there is an attempt to evade or defeat a tax, and it's willfully known. That's kind of what. And the key is willful. All right.
Mm,
There is if someone makes a mistake, transposes a nine for a six, six for a nine by mistake on a tax return, that's a mistake. There's no willful intent to do so. And it happens most often, anybody who's amended a tax return knows a mistake has been made. That's not a problem whatsoever. That's not a crime. What's a crime is when you actually are underreporting your income or over expensing things or putting deductions that are overestimating deductions on tax returns intentionally with the purpose of I just ain't paying. That's it. Now, when it comes to well, how big does it have to be? Is it $1? Is it $10? $1 million? And
right.
the answer is there is no number. So then it becomes down to okay, what do we do with this number? And the federal judges take in consideration the amount of the loss. And there's a guidebook that the federal judges use. It's called the Sentencing Guidelines. And what they do, they take the loss, they figure out who the victims are, they figure out a lot of different things, and they put it in a formula. Okay, and this book, it's public knowledge. Okay, and it'll determine how many months a person can spend in prison based upon the crime. So, for
Wow.
example, if someone did $100,000 in tax crimes, that's probably 18 months, give or take 6 months.
Wow.
Okay, if it's less than 40, it's probably 6 months or zero. But here's the kicker: the judge is not required to go by this guideline as a rule. It's a guideline. So the judge may sentence the person from 0 to 5 years. Now, the guideline may say, hey, it's 18 months. But if you tick off the judge, they can say, oh, it's 3 years, right?
Right.
Or if you're really nice to the judge, they may say, oh, it's 6 months or maybe 0 months. It just depends on the nature. But the point is, the judge has a range that they're required to go, that they are bound by, but the guidelines kind of set the general idea of where they think it should be. And the reason is because, $100,000 tax loss in Miami is going to be different than a $100,000 tax law in Des Moines, Iowa, because the standard of living is different, the income expected is different, and that type of thing. So they have this guideline nationwide. So hopefully, the person who's committing a $100,000 tax evasion in San Francisco is getting the same sentence as the one in Abilene, Texas, that type of things. That makes sense.
That does make sense. So I know that there are folks listening to this show who are like, oh my God, if I mess up my taxes, am I going to go to jail? Like, that is one of the most common text messages I get. Like, there's always this fear of, am I going to go to jail if I did my taxes wrong or I missed something? How would, let's just talk about navigating that and the likelihood of that actually happening. And I know you have a really interesting analogy for this with like getting pulled over. So I want to talk about that and kind of get, because I do the same thing. I go, like, an audit is like a traffic stop, right? But let's just talk about what can happen as a taxpayer and how it becomes, we'll say, a crime or when it's not a crime, right?
Sure.
Maybe some examples.
As a CPA, okay, I
Hmm.
would advise everyone to file and pay the right amount of tax. So
Of
there should be
course.
no fudging whatsoever. Okay.
Right.
But there's times where sometimes you just have to estimate. It happens. It just happens. You don't have all the receipts, but but it happens. So the issue is in order to commit a tax crime, it has to be willful with the intent of, I just don't want to pay this tax. It's
Right.
completely fabricated. It's over deducting something or underreporting something, taking cash tips, putting it in your pocket, and not reporting it at all. That is a crime. Now, the question you know, is this worthy of the government's resources to investigate the lady who's got three kids who happens to put her hand in a tip jar to take the cash out, to earn a living? The answer is no. They're not going to mess with that, right? Because it's just too low of an issue. Now, let's put a couple zeros at the end of it, right? Now you got a restaurant owner who's got five restaurants. He's putting cash into his pocket, not putting it through the cash register, not depositing it. Now you're adding zeros onto it, right? That becomes for sure tax evasion that would get the notice of the IRS and the federal government. You have to put a stop to that.
Right.
Okay. So they can't go after every tax evader in the whole wide world. It's just not going to work. There's not enough resources to do so. So when we, as criminal investigators, evaluate these types of cases, whether it's the single mom with her hand in a tip jar or the restaurant owner that's evading taxes off of 10 stores, right? We look at it from a standpoint is the lady that's putting her hand in the tip jar is probably doing 56 and a 55. Is that, would you, is that exceeding the speed limit? Absolutely. Are you worthy of a ticket? Yes, you are. Does it get stopped? No, it does not. Now, on the other side of the thing, you've seen people go 85 down to 55 that are weaving in and out of traffic, that are giving everybody the middle finger and throwing beer cans out the window. Does that person need to be stopped? Absolutely, they have to be stopped, right? And
Right.
so that's where IRS criminal investigation would step in, going, okay, we cannot have this type of behavior. It is so egregious. It almost gets to the point where they have to be stopped, right? We
Right.
can't have that. Otherwise, the person's doing 56 going, well, he can get away with it. Why can't I? And then now they're doing 85 and doing the same thing. So
Exactly. Yeah.
that's how it works.
What about, so I'm just curious. So what about folks who maybe they're reporting and they don't have the intent to mislead, underreport, anything like that, but they get like bad advice from their preparer or their preparer does something on the return without their, I say without their knowledge. Yes, of course everyone's signing their return, but they're not savvy enough to understand what's happening with the return and the preparer's doing something, maybe fudging something, maybe not.
Mhm.
What can happen there? Is the taxpayer still liable? Does anything happen to the preparer?
Well, there's two different issues to deal with. One's civilly and one's criminally.
Okay.
Civilly, the taxpayer is required to know what's on that tax return, and they have to hire the right person to get it done and make sure it's accurate.
Right.
So if the return preparer messed up, well, that taxpayer is still civilly liable for that tax, no matter
Okay.
how much the return preparer screwed up, right?
Okay.
Now, from a criminal standpoint, if the return preparer does something on that tax return, did the taxpayer have anything to do with it? The answer is no. They did not willfully do anything wrong. They may sign the return because we all go to mechanics because like, I can't fix my own car. I
Right.
trust a person to do it. Well, we trust people to prepare our returns properly when we give them the right information. So, from that taxpayer standpoint, they will not be charged criminally because they had no willful intent to evade anything. Right. Now, the return preparer, on the other hand, can be charged because if they are putting information on the return to boost up the refunds, right? And we see this quite often in certain neighborhoods where they will put false dependents, they'll put false businesses in there, they'll increase the income or decrease the income in order to get certain tax credits and that type of thing. Then that person can go to prison because they are willfully preparing a tax return with the intent of getting a larger refund or not paying as much. Okay, so they're the ones that go into prison, not the taxpayer itself.
Right. And that's really interesting. And I know that people tend to fear, getting audited. They're not sure what that means or if they're in trouble if they get audited, right? I want to just call out that, auditing doesn't mean you're under criminal investigation, that those two are not the same thing.
That is absolutely correct because a civil issue is not a criminal issue.
Right. Civil versus criminal. I know this is like legalese, right? But
Mhm.
let's just talk about like civil versus criminal. It comes down to intent, right? It's just damages versus damage, if you will. Like it's more,
Well,
right? Is it
we
how
look
would you
at two
explain it?
things. To go from civil to criminal, there are really
Mhm.
two major issues. Number one is how big's the dollar amount,
Okay.
okay? And number two is going to be how willful is it? If it's willful,
Mm,
for sure, okay, and the dollar amount's big enough, so willfulness has to be hit. That's
mm.
that's that's mandatory. You have to willfully do this in order to commit a crime.
Got it.
Okay, it's not mistakes. Not I left this off by mistake, that type of thing. And to prove willfulness, the IRS criminal investigations will look at their various things. They look at the number of years. Did you do it 1 year, or did you been in it for the last 10 years?
Mhm.
10 years, you got no excuse. 1 year, we all make mistakes, right? That's number one. Number two is that you try to hide it. Once you got caught, how you grew up as a kid. Did you do this?
Yeah.
No, no. You get worse. You got beating for the lie more than you did for the breaking the window, right?
Yep.
The same concept is that once you got caught, what did you do as a defendant? And if someone says, "Oh, I made a mistake," more than likely it's not a criminal issue. They're not going to prosecute that. How's that? So it has to
Makes
be
sense.
there. The dollar amount has to be large enough to be it's worthy of prison time. It has to be large enough to be so egregious where anybody that looks at this can say that they're worthy of prison. Because remember, the audience for a criminal investigation at the end of the day is a jury, and a jury may or may not even have a high school diploma. And so
Mm.
you've got to
True.
convince 10 people or 12 people in a jury box that this person over here in the defendant's chair deserves to go to prison because they did A, B, C, D, E, and F. You can't do that. They shouldn't be able to do that. And so your audience is going to be so when it comes to tax evasion, you have to really, I call it dumb it down
Mm.
to where anybody who does not have an accounting degree or business background can understand exactly what's going on. Oh, they report $10,000 a year as income, but they live in $1 million house. How does that work? Anybody with common sense will say, "You can't do that. Doesn't make any sense at all." Right? So those are the types of cases that IRS goes after because it's an easy story to sell to non-business people. The typical person on the street could understand it would say guilty.
That makes total sense. Yes. What other for the small business owners out there, what are some of the ways that you could I will say intentionally or unintentionally evade taxes beyond I know there's underreporting income, but I know that there's a lot of other things that can happen that you might have seen that are really common for small business owners.
The small business owners, the ones that I see that get caught, okay, that get prosecuted, are the ones that are underreporting the income
Mhm.
more than likely, or they're over deducting something. Those are the typical. I'll give an example. The doctor that buys a Ferrari for, let's say, $500,000, he goes to his return preparer and says, he don't tell the return preparer about the $500,000 Ferrari. He says, "Oh, I bought this imaging machine for $500,000 depreciated over 4 or 5 years, right?" And so they start writing it off. The return preparer has no idea that this is the Ferrari type of thing, but the business owner knows this, and they do it over and over and over and over again, knowing what they're doing. So it's like putting deductions on a return that they know is completely false. And the other one is here's all my income. And I see this quite often. Here's all my income, Mr. Return Preparer, and they turn over the income, but they don't mention the bank account that got all the cash deposits that they're
Mm.
living out of. Okay. So they're not telling the return preparer everything. And it's not like one time, it's multiple years and it's high dollar amounts where you circumstantially can prove it's intentional, you
Right.
know. Yes,
And
that's what you're doing. So it's usually overstating expenses or not reporting all the income. Now there is a little segment to this that, especially for employers, not just small business owners, but people who have employees, which are the payroll taxes. And this is a huge issue because about 80% of the federal government's money comes in either through the FICA or the federal withholdings or the estimated payments, okay, that are made. It's a huge part of the federal budget is payroll taxes.
yeah,
And when an employer withholds out of an employee's paychecks, okay, there's taxes, that tax is considered trust fund taxes, which means it's not the employer's money, it's not the employee's money, it's the government's money. And it happens to be in the custody of the employer. So the government wants its money, right? And if it doesn't get its money, they consider that theft. Now, that can cause huge problems because the IRS is very slow. If you don't file the proper reports, you're not going to get a letter the next day saying, "Oh, where's the money at? Where's the reports at?" It's
right.
usually months down the road or years down the road. So that trust fund money that's not turned over to the government the government considers theft, and it's in the statute as theft. Okay,
Mhm.
and so that money, think about it, grows and grows and grows. So when someone's not turning over the payroll taxes like they're supposed to, it may be months or years down the road. Now you got a $20,000 a month problem. It's now becoming a $250,000 problem. And if it's not caught in 4 years, now it's $1 million problem. Now, is that going to get the IRS attention? Absolutely. We talked about the dollar
Yeah,
amounts, right? For
magnitude, yep.
sure. Yeah. Well, I've seen plenty of these cases where the business owner will take that money, all right, and then they'll, I'll go buy this new car. I'll take my kids to Disneyland. I'll buy, all this. They spend it on themselves, right? And don't turn it over to the government. And then the government steps in and says, "Where's our money?" And from a criminal standpoint, that is a crime, and they will definitely prosecute that. Because remember, the audience is what, 10 or 12 people sitting in a jury box. They're going to understand you took money out of this paycheck and went to Disney World with it, or went to Vegas with it. You deserve to go to prison, right?
Yeah,
That's kind of how
yeah.
I think. Now it becomes iffy. It's still a crime if the money is used to keep the business afloat, like the rent, utilities, and that type of thing. It still is a crime. But where's the jury appeal? Who wants to put the business owner who's trying to keep his, 10-year dream of owning a plumbing shop afloat? You're gonna put this person in prison because they paid the rent versus,
It's
you know,
story. It's story.
it's a story. So that's the type of story that they don't want to present to a jury. Is it still a crime? Yes. But is it prosecuted? Rarely, so
Interesting. Interesting. Okay, what about, because I've actually seen this. What
mhm.
about a company that withholds the payroll taxes but hangs on to them until the end of the year? Like how long, like how often do they need to pay and remit them to not have it be criminal?
Alright, well, the law what's the law state? The law states that it must be turned over either on either a weekly basis, within a couple of days, or within a couple of or within a month. It depends on the
Yeah.
amount, right? But the
Right.
law states you gotta turn it over.
Right.
Well, that's the rule. So
Mhm.
if you hold on to it for a full year, okay, you've frankly, you have did payroll tax fraud for a full year.
Right.
That's the way. So it's based upon what was required by the employer at the time, whether it's daily, monthly, weekly, whatever the federal tax deposits have to be made.
Gotcha. Gotcha.
So the
Yeah,
answer is don't
and
do that.
yeah, no, I've seen that before, and but it's also like and beyond the legal side of it and the actual fact that it's a crime, right? That's black and white, but beyond that, the employee thinks that they're having their taxes withheld and they're paying their taxes, and then they go to file their return, right? And they've had this much withheld, but maybe at some point that gets reconciled and it's like, actually, you hadn't actually paid any of this, or your employer hadn't paid any of this for you, and now you owe taxes, or you've been under withholding or whatever it is, right? So like that the employee suffers too, right?
Well, the employee does not suffers in one way, but not another.
Okay.
The employee is not going to suffer at the end of the day because
Okay.
the IRS will take at face value that whatever W-2 has been issued with the employee's name on it is true and accurate,
Okay.
and it's not the employee's fault that the taxes were not turned over.
Okay.
So they're not going to go down that road. But what typically happens is that when an employer is not turning over these taxes like they're supposed to, they don't want to get caught. So they don't file a W 2 at the IRS. They'll give a W 2 to the employee, but not to the IRS.
Oh, okay.
Okay. So here's the kicker. Technically, it doesn't go to the IRS. It goes to Social Security Administration. Social Security Administration shares that with the IRS. So the W 2 goes to the Social Security Administration. So what happens is this is that 10 years down the road, right? This has been happening. The employee's been filing his tax return like he's supposed to, right? He goes to Social Security Administration when he becomes disabled or becomes retired. They say, excuse me, we don't have any record of you earning a thing. Why? Because the employer never turned over the W 2 to Social Security Administration.
Wow.
And so, yes, they can get victimized if they don't. And everybody should do this, not just if they think they're not turning over the payroll taxes, their employer's not doing it. Everybody should look at the Social Security Administration's record to make sure every now and then that your wages are being reported properly to that administration. Okay,
Yes.
so the IRS will allow you to file tax returns. Okay, as an employee, like you're supposed to, but the Social Security Administration may or may not have record of it because when this happens, the employer typically is not turning over all the information to the government agencies like they're required to be.
Yeah, and whether it's this situation or not, if you want to make sure that they're reporting it so that your Social Security benefits aren't at risk, this is a good idea anyway. And I do this annually. We have a Social Security Administration login, like me and my husband both set up an
Hmm.
account, and you can go see your status of benefits. You can
Yes.
go see how much has been reported. Every American should be doing this to double check. Just for the sake of sanity, like you check your credit score, or you check anything else, like just go in and check on it. And I'm going to make sure we put a link in the show notes on where to find that.
Yeah. Well, so we talk about the story with in front of a jury, right? The
Yep.
jury will be very mad at the defendant who didn't turn over the payroll taxes, took the money, and went to Disneyland with it, and then screwed over his employees by not turning that form over to the Social Security Administration. Because now the person who's pushing the cars, who's washing the outside the windows, who's digging the ditches, is not going to get his Social Security like he's supposed to because for the last 10 years, his employer hasn't turned it over. Now
Right.
that will make a jury mad, and it'll make me mad. The guy's been working all his life, and you took his taxes and then turned it over, and you didn't report to the government. And now he's screwed out of his benefits. You know that's a story that will definitely sell.
Well, yeah, and it's about who's the victim in the story.
Exactly, and that's key situation. Not only is the federal government the victim, but truly the employees are the victim as well.
It's really interesting too when you think about it that it's not just as black and white. I mean, the rules are black and white in terms of what's a crime, what is, prosecutable, what is
We call it a viable prosecution.
viable prosecution, and then
Yes.
but then it's what is likely to be the outcome of that given humanity, emotions, story,
Hmm.
and the circumstances and facts. It's really interesting how much of a gray area that can be.
Oh, the crimes are black and white. The question is the 55 and the 56 and the 55-mile zone, or is it
Mhm,
85 weaving in and out? I think it's the best analogy I can give. That yeah, certain things are crimes that probably will not be prosecuted. Can they be? Yes,
mhm.
but more than likely, it's going to be the egregious one.
So if someone's listening to this and they believe that, for example, I know that small business owners, maybe they're making a mistake somewhere, not willful, and they can correct it right by hiring a professional. We'll just say that is one corner of our listeners who maybe listen to this and go, "Ooh, I didn't know that." But for those who feel like, hey, my employer might be doing this, or like we mentioned earlier, the tax preparer, like something might be amiss here. What are the different ways that they can take action on that or look into it? I mean, obviously, they can't just call directly the IRS Criminal Investigation Unit. What's the proper path to report or to communicate suspicion of this type of thing?
There is a form, I believe it's called a 2797 that can be, and I'll verify this real quick. It's a form 20. I think it's 2797. That's like a whistleblower type of thing
Oh, okay.
that they can send to the IRS. It's a criminal referral. That's what it is. Yeah, report for potential referral. So a form 2797 they can fill out. It's one page, your name, address, the allegation, and you send it off to some like black hole somewhere, and it goes wherever it goes. That type of thing. That's one way to do it. That's probably the most common way of doing that. Now, if it's big numbers like millions of dollars, then there's something called a whistleblower, which is also allowed. They can Google whistleblower IRS and get that form as well.
Okay, cool. Yeah. Don't worry about being a tattletale, guys. This is your money we're talking about if you feel like you've been affected. They say don't be a
Yes,
narc,
yeah,
right?
yeah, yeah. Don't go out there and say my neighbor next door sold his lawnmower for $100 more than what he bought it for originally. Go put him in prison. It ain't gonna happen. No one's gonna take that seriously. It's not worth the time.
No, no, that's not one more piece of paper they have to process too at the IRS. Robert, what other advice do you have for our listeners who are small business owners just trying to stay out of trouble right now? And what can they do to just make sure that this is never something they have to worry about?
Well, the first of all is always file a tax return, and make sure you vet your return preparers that are not some seedy, behind the dark alley promising you a large refund. Some of the things are just obvious, but just be honest about it and prepare a tax return, and you can always put your head on the pillow at night and know that you can rest comfortably that you're not going to go to prison because of a mistake. That's really the biggest issue. Is just tell your return preparer everything, let them file it. If the return preparer makes a mistake, you're still going to be held civilly responsible. Okay, it just happens. You can't just delegate your civil responsibility to somebody else. But from a criminal standpoint, you're fine. You're not going to
Right.
have any problems. You're not going to have any problems whatsoever. They only go after the people who are willfully trying to evade taxes, that type of thing. The second thing I would always say is that as a small business owner, if you do have employees and you do withhold, well, you should. If you have employees, you're required by law to withhold these payroll taxes. By all means, always pay the payroll taxes and turn it over to the government. If you don't do so, okay, the IRS can civilly cause you problems as well as criminally cause you problems. Civilly, there's an issue because there's something called a responsible party, which means responsible party means there will be an investigation by the IRS, by a revenue officer typically, and they're going to do interviews of whoever was responsible for making the payroll, who's doing the hiring and firing, who's preparing the reports, who's paying the taxes, who's not paying the taxes, who's paying somebody else other than the government, who's making all these decisions. And they'll take a look at all that and they'll determine whether or not someone's a responsible party. And that responsible party is going to be responsible, it's the word responsible party, for all the trust fund taxes that were not turned over to the government. So it doesn't matter if the person's a business owner or not. It could be the controller, it could be the bookkeeper, it could be the payroll clerk. There's a lot of tools that the IRS can use in order to collect that money because they consider it theft. And because they consider it theft, let's assume it's $1 million liability at the end of the day because you have a small business with 50 employees and have done it for a couple years or a couple months. It's not dischargeable in bankruptcy, which means you can't declare bankruptcy and say, "Oh, my fault, I'm done." No, that type of the trust fund recovery penalty is what it's called, is a big hammer at Jews, and you cannot discharge it into bankruptcy. It's going to stick around to you for the last 10 years for the IRS to collect. So always, always pay the payroll taxes. And if you
And
don't, and if you do have problems, be sure you get professional help to get you on the right track.
exactly. And what other resources do you have, Robert, if people want to learn more about this?
No, well, I've written two books. One is called Criminal Tax Secrets: What Every Defense Attorney Should Know, and that's really for defense attorneys or anybody who's a CPA or has some type of background who likes, the decision making behind the scenes of what's civil, what's criminal. That's all inside the book. How the judge looks at things, all those criteria that they look at. That's one book. It's on Amazon. There's another one called Unpaid Payroll Taxes and a time bomb you can diffuse. And the whole point of it is for tax professionals and small business owners can read this as well to know what the problem is, how to prevent it, and if you are in the middle of it, how to safely get out of it or negotiate your way into not paying as much.
Yes.
You're still going to pay, but at least the penalties and interest, we can mitigate some of the damage so it doesn't destroy your business. Because ultimately, at the end of the day, I don't want someone to have their business taken away and destroyed and relationships destroyed because of payroll tax problems. You know.
And for those who want to listen to more forensic accounting talk, you also have a podcast too, don't you?
Oh yes, I also have a podcast called the Fraud Fighter Podcast. And if you are interested in the forensic accounting, anti-fraud, anti-money laundering industry, I interview experts who are in the field, and we discuss what defense attorneys look for in a forensic accountant. Forensic accountant means an accountant who testifies in court. We talk about bankruptcy fraud, how that's investigated. So if you're into the investigations and white collar crimes and that type of thing, it's a perfect podcast for those who are interested in that industry.
Love it. Thank you so much, Robert, for all your resources. Guys, if you're listening to this show, share this with your attorney, your accountant as well, so that they can hear this information from Robert and explore his resources too. Thank you so much for joining me on the show today.
Thank you. Thank you. Appreciate it, Shannon.
Do you want to explore more about the topics discussed in today's episode? Or maybe you have specific questions on how to apply what you learned. If so, check out the Keep What You Earn community. Join other listeners, entrepreneurs, and experts and get the support you need to get out of overwhelm and into action. Click on the link in the show notes to join now for free and start maximizing the value you get from each and every episode. Thank you so much for listening. If you enjoyed this episode, please leave a rating and review on your podcast platform. This small action goes a long way for podcasters to get our message heard by more business owners just like you. Be sure to check out the show notes for links to information about our guests and ways to get in touch with me. We'll see you on the next episode.